All right, good day. Hope that you're doing well. In this video, we're going to be doing cost accounting. Starting off with question 2, whereby we need to match these concepts with these descriptions. Now, 2.1.1 says wages paid to factory supervisor. Now, where do we classify wages paid to a factory supervisor? Now, remember, the supervisor is not basically, they're not directly related to the production of the trading stock, right? So here we're dealing with the manufacturing company, a company that produces its own stock. Now, a supervisor, they do not directly work on the trading stock that we are making, right? So basically, it's going to be your indirect labor cost. So this is indirect labor. Now, advertising, remember we have three departments, right? You have your administration, right, whereby there is admin staff, office work, and then you have your factory, which is our main focus. Now, when it comes to cost accounting, we're only interested in costs relating to the factory, right? And then the last department you have is your selling and distribution. Now, advertising costs are part of your selling and distribution costs, right? So as a result, here it will be my selling and distribution cost. All right. Now, office telephone, remember we have three departments. This would be part of our admin, right? So office telephone account is admin cost, right? So this would be administration. Now, materials used to make the final products. Now, these are direct materials, right? Which are the materials that we see on the final product. So this would be our direct materials. And lastly, insurance paid by the factory. Remember, we are interested in costs relating to the factory. Now, this would be your indirect cost. And to be specific, your indirect costs relating to the factory, you recognize them under your factory overheads, right? So this would be your factory overhead cost. Now, moving on to 2.2, you are provided with the following information relating to Fashion Jeans manufacturer, and their financial year ends on 28 February each year. Now, we need to prepare the following ledger account. We need to prepare our raw materials account, our factory overhead account, work in progress account, as well as your finished goods stock account, right? Now, remember, there are three production phases. You have a phase whereby you have your raw materials, which is the first channel we're going to prepare. Now, all these, so you have your raw materials, you have your work in progress, and you have your finished goods. So these are the three phases of production, right? Now, all these accounts are assets account, meaning that they're all going to increase on the debit side and they're going to decrease on the credit side. So, for example, with regards to raw materials, transactions that increases your raw materials, such as your purchases, right? You will recognize them on the debit side. And now these raw materials are going to be transferred to your work in progress. Now, work in progress is where we are taking our raw materials and we are combining them, right? So here, this is the process whereby we're trying to take our raw materials and try to convert it into finished goods, right? So as a result, what would be those costs in order to transform your raw material into your finished good? There would be labor, right? So there would be direct labor as well as indirect labor, right? So there would be costs relating to the factory, such as water and electricity, right? So those kind of indirect costs which relates to your factory, which are part of your factory overheads account, you need to classify them in your work in progress account, right? So those kind of costs, we're going to classify them in our work in progress account, direct labor, indirect labor, costs relating to the factory, because this is where the actual production happens. And now, after these would be transferred to our finished goods. Now, finished goods is the final product that we sell to our customers, right? So what would be that transaction which would increase this finished goods account? This is if we take our work in progress and we transfer it to finished goods. And the possible transaction that would decrease these finished goods is if we sell our goods, right? And remember, when you sell here, you need to classify those sales at their cost price on the credit side, right? So this is just a brief summary of how your accounts interlink with one another, right? But first, let us start with the preparation of this raw material stock account. Now, this is our raw material stock account. And as I've said, this account would increase on the debit side and it would decrease on the credit side. So now, first, I'm gonna start with my opening balances, right? So my opening balance, which is my balance brought down. So remember here, this is at the beginning of the year. So this would be at 2021 March 1st. And here, it's my balance brought down. All right, now this would be my opening balance. Now, my raw materials account, my opening balance, right, is gonna be the 72,000. Right, this would be my opening balance. Now, I'm also given my closing balance, right? Now, every time, right, remember this raw material stock account, we would need to transfer some of these raw materials, right, to our work in progress account. Now, always, On your credit side, you would have this line item, which is your work in progress account. Now, this is the raw materials that you would transfer to your work in progress phase, right? So work in progress. All right. So now, every time whenever they're giving you an opening balance as well as the closing balance of your raw material stock account, just know that this line item, or basically this raw materials that you're going to transfer to your work in progress phase, it's always going to be a balancing figure. This is if they're giving you the opening balance as well as the closing balance. Now you would see, what do I mean by that? Now let's recognize our closing balance that we are given. Now my closing balance, right, which is my balance brought down for the next year, right? So here, next year at the beginning of the year 2022, March the 1st, balance brought down, it's going to be equals to the 54,000 that I'm given here. And remember, before a balance is brought down to the next day, it first must be carried down on the corresponding credit side in this instance. So here, my balance credit down, it's going to be the same amount, which is 54,000. Now, remember, your work in progress, it will be your balancing figure in this instance. Now, let us look for the transactions which affect our raw materials account, right? So we have purchases, right? So summary of transactions for the year, we have purchases of 850,000, right? So raw materials purchase for cash. So these are cash purchases. So here, I'm going to write bank to show that we purchase these using cash. And my cash purchases amount to 850,000, right? Now, we have carriage. Right? Now, remember, any additional costs that you incur on your raw materials, to be specific, your delivery fee, your carriage, your import duties, you would need to add them as your cost. Basically, you would need to add them on your raw materials stock account, right? So now here we have carriage on purchases, which amounts to 53,000. So I'm going to classify this carriage. And it amounts to 53,000 on the debit side, remember, right? Now, custom duties paid, right? So now we have custom duties which we paid, which amounts to 124,000, right? So let me just write that using a different marker. So I'm going to write it here, custom duties. And my custom duties in this instance, they amount to 124,000, right? So if I have any additional information with regards to these, I will just erase them and adjust these balances, right? So now custom duties. Now advertising, remember, it's part of your selling and distribution. Wages for your factory workers, this is your direct labor cost. And for factory cleaner, remember, this would be your indirect labor because these people are not involved in the actual production. Now, factory foreman salary, it will be indirect labor, rent paid. Okay, these are expenses relating to the factory. Now, indirect materials. Okay, so now let me see on my additional information if I don't have any information that affects my raw materials. Now, information C, transaction 1, raw materials costing 127,000 purchased on credit from Al Traders on which is a foreign-based company, has not been recorded. Custom duties of 15% on these purchases, okay, they were paid and they were not recorded, right? So now, first, these raw materials are costing 127,500, right? And we bought them on credit. So I would need to classify these purchases. Now, because we bought them on credit, I'm going to classify them as my creditors control, or the corresponding account that is affected is my creditors control. So when you buy on cash, your bank account is affected. When you buy on credit, your creditors control account is affected. So here, creditors control, and the stock amounted to 127,500. Now, I have custom duties. Now, remember, these are additional costs which you need to add, right? Because if you didn't incur these costs, your trading stock wouldn't be, or rather your raw materials wouldn't be present in your company. So now I'm going to say 127,500, and I'm going to multiply 15% of this amount, which would be my custom duties. Now, if I punch this into my calculator, my custom duties amount to 19,125. Right. Now I have my custom duties already here. So my custom duties, let me write it here. I had 124,000, and now I'm going to add the 19,125. Now my total for custom duties would equal 143,125. Right. Now, as long as you show these workings on your answer sheet, now let me write the balance here. So this is 143,125. Right now, let me see on my additional information. So this relates to rent, insurance, water, and electricity. So basically, those were all transactions that affected my raw materials account. Now, let me try and balance this account out. Now, first, I could see that my debit side is greater than my credit side. So I'm going to add all my values on my debit side. Now, to be specific, let me highlight those values. So I'm going to take my opening balance. I'm going to add it to my bank. I'm going to add it to my KVH, custom duties, as well as my creditors control. Now, adding these amounts, they should equals to 1,245,625. So it's 1,200,000, you need to write it on both sides, 625. All right. Now remember, I said this is going to be a balancing figure. The debit side needs to be equal to the credit side. So here, to find this work in progress amount, I would need to take the 1,245,625, and I would need to subtract the balance carried down of 54,000. Right. And now, if I do so, my work in progress should be equal to 1,191,625. And this is my balancing figure. Now, these is the cost of my raw materials that I'm going to transfer to my work in progress, right? Now, this is 1,191,625. And this would be your complete raw material stock account. Now, the second account they want us to prepare, it is our factory overhead. Now, what do we recognize in this factory overhead account? Basically, here, it's important for you to know that you're going to recognize indirect costs, right, relating to the factory. So all your indirect costs relating to your factory, right, costs such as rent for the factory, water and electricity for the factory, factory foreman salary, indirect labor, you classify them in this account. And to be specific, on the debit side. Now, after you have classified all those costs on the debit side, remember these costs would form part of our work in progress, because work in progress is a stage of production whereby we are putting everything together inside the factory. So hence costs such as labor, such as rent, such as water and electricity you use for your factory, they form part of your work in progress account. So after you've ordered all your costs on the debit side, right, you should transfer them to your work in progress account, right? So here I'm going to write it as WIP. Now, let us look for those indirect costs which relates to the factory that we need to recognize in our factory overhead account. Now, I'm gonna start off with this here. So this, remember, it relates to selling and distribution. And when it comes to cost accounting, you're only interested in those costs that relates to your factory only. Now, here, okay, wages for factory workers. This is our direct labor. Factory, okay, indirect labor, they already added it here. Factory performance, now rent paid. Now, I'm only interested in rent that is paid towards the factory, right? So here I'm going to start off with my rent. And let me see how much of this amount, which is 320,000, was allocated to the factory. So here, rent and sundry expenses, so this is important, rent as well as your sundry expenses are allocated according to the percentages of the floor space. Now, your factory occupies 80%, so meaning that 80% of that amount, which is 320,000, would form part of your rent for your factory, right? So rent for factory, this would be equals to 80% multiplied by, so let me see the amount again, 320,000. And punching this into your calculator, your rent for the factory should be equals to 256,000. This is the portion that is allocated to the factory, and this is the amount that we are looking for. So I'm going to classify it here, 256,000. All right. Now let me look for other line items. Oh, sundry expenses are also showing there. So let me start with it. So also 80% is allocated towards the factory, right? So sundry expense for our factory, it should be 80% of the total amount. Now let me look for my sundry expenses here. So these are my sundry expenses paid, which amount to 17,400. And as a result, punching this into your calculator, sundry expenses portion allocated to the factory should amount to 13,920. Now remember, these workings, you must show them on your answer sheet, right? So now let me look for other costs. Now, okay, factory foreman salary. Now, water and electricity, I'm only interested in that portion allocated to the factory. So now let me look for transactions relating to water and electricity. So this I'm already done with it. Same applies to this. So water and electricity of 21,000 relates to the factory. So already here they've calculated the portion allocated for the factory, which is 21,000, right? So here, water and electricity. So because there isn't enough space, I'm just going to write water and E, and they said it's 21,000. And I am done because I'm only interested in water and electricity relating to the factory. Now here, the last transaction that is remaining on C, it relates to insurance. Now let me see what do they say about insurance. Insurance must be apportioned in the ratio of 4, 1, 1. Now remember, it's my factory. I'm going to indicate it with F, and I have my selling and distribution department. And lastly, I have my administration department. I'm going to indicate it with A. Now for my factory, it's 4. Selling and distribution is 1. Admin is 1. So now let me look for my insurance amount that we paid. So now insurance paid equals to the 42,000. So here I'm going to say, okay, 42,000, and I'm going to multiply it by what I want always stays at the top. What I have must always be at the bottom. So here I'm looking for the portion allocated to the factory, which is 4. Now this amount I have for insurance, it's for factory, selling and distribution, as well as admin. So I'm going to add these values. So 6. Now punching this into my calculator, the insurance that relates to the factory, it's cost to 28,000. So here my insurance amounted to 28,000 in accordance to my calculations. Now, let me look for other costs, my other indirect costs relating to the factory, right? So I have indirect material purchased, and these amounts to 43,000, right? So indirect, I'm gonna write the balance here for my indirect material, and you're gonna see why. So always with regards to indirect material, so let me write the amount here. I'm gonna do the calculations here. So the amount that I'm given for my indirect material purchased, it's 43,000. Now, always when it comes to your indirect material, you need to take into consideration your consumable stores on hand. So what exactly do you need to do with these consumable stores? Always on your indirect material, you need to do what? You need to add this balance at the beginning, and you always need to subtract your balance at the end for your consumable stores on your indirect material total, right? So just always remember that. So here we're going to add the 7,000, which is the balance at the beginning, and we're going to minus the balance at the end, which is 3.8. Now punching this into my calculator, my indirect materials would amount to 46,200. And let me go classify that amount on my ledger account. So here I have my indirect. I'm going to start by writing them here because I don't have enough space. Indirect material, and they amounted to 46,200. Now remember, you need to add all these costs, right? You need to add all these amounts, and all these balances you need to transfer it to your work in progress. Now, if I add all these amounts, the 142,000 plus 72,000 plus the amount for rent, sundry expense, water and electricity insurance, as well as my indirect material, so my total should amount to 579,120. And remember, you need to write this balance on both sides. Now, this amount we're gonna transfer it to our work in progress account always, right? And we are done with our factory overhead account. Now, let us move on to the next account that they want us to prepare. Now, let me see in accordance to the question. So we are done. So we are done with the raw materials account. We are done with the factory overhead. We left with these two accounts, your work in progress as well as your finished goods stock, right? So now let us go to the work in progress account. Now, moving to your work in progress account. Now, always these accounts I'm going to write here, they would always be here, irrespective of the question you're given, right? So always, right, this work in progress account, remember, you need to transfer it to which account? Your finished goods account, right? And as a result, remember, this increases on the debit side and it will decrease on the credit side. And you will need to transfer this to your finished goods, right? Now, what other transactions are only, or what other line items are always there in this ledger? Your direct materials, right? So direct material, remember, this is the phase of production, direct material cost. your direct labor costs. So always remember these line items: direct labor cost. Now, lastly, your factory overhead account. So always these transactions on your work in progress or these line items that would always be there. Try to always memorize them, right? Your factory overhead. Now remember, we said the factory overhead balance we've calculated before. We're gonna transfer it to this work in progress account, right? So factory overhead. Now, what is that balance? Let me go and classify that balance. So here is our balance on our factory overhead that we need to transfer, right, to our work in progress, 579,120. So I'm going to write this amount here. Your direct labor cost. Now this is labor related to those people who are doing the actual production, right? Who are making the actual product. Direct labor. So basically, to be specific, factory workers. Now, wages for our factory workers. This would be our direct labor because these people are involved in the actual production, right? Your factory workers. So 763,000 would form part of your direct labor. Now, what is your direct materials account? Now, remember before, right? I showed you the three ledgers. I said you have your raw materials account, you have your work in progress account, you have your finished goods account. And I said the balance, or there is a certain cost of your raw materials you're going to transfer to your work in progress, and there would be certain cost of your, or rather certain stock from your work in progress you're going to transfer to your finished goods. Right now, this direct materials, these are the direct materials or the raw materials that we transfer to the work in progress stage. Right, so same applies to your factory overhead. We did the same thing. Now for our direct material, remember, if I were to show you the ledger we prepared, right? We said this direct material that we're going to transfer to our work in progress, it was even a balancing figure. So this is the cost of our direct material that we transferred to our work in progress. And this is the amount we need to recognize in our work in progress, 1,191,625. So I'm going to write the amount here. So direct materials, right? Or these are our direct materials or our raw materials we transfer to the work in progress. This is the factory overhead cost balance, and this is our direct labor, right? Now, let me see with regards to my work in progress if I'm given my closing balance. If I would be given my closing balance, it means that this work in progress stock that we're going to transfer to our finished goods is going to be a balancing figure. That's if I'm given my closing balance. Because remember, I always tell you that whenever you're given your opening as well as your closing balance, the stock, whether it's your raw materials, whether it's your finished goods that you're going to transfer to the other account, it's always going to be a balancing figure. Now, let me see if I'm given my closing balance for my work in progress. Yes, this is my closing balance, which amounts to 62,000, meaning that this would be a balancing figure. So let me recognize my closing balance. So it's balance brought down for next year at the beginning of the year. And I said this balance brought down for next year 62,000. And remember, before it was brought down, it had to be carried down on the credit side, right? So balance carried down, which is 62,000. Now here I could see that, all right, my debit side obviously is greater than my credit side. So I'm going to add all these balances on my debit side: 81,000 plus 1,191,625 plus 763,000 plus 579,120. Now adding all these amounts on my debit side, they should be equals to 2,614,745. So I'm going to write it on both sides. Now, my balancing figure, to find it, I'm going to take this 2,614,725 and I'm going to subtract the balance carried down of 62,000. And this would give me my work in progress stock that I would transfer to my finished goods phase, right? And if I do so, this would amount to 2,552,745. So it's 2,552,745. Right, let me just erase here on the side. Now, finished goods account. Now, here on our finished goods, remember we said these work in progress stock we're going to transfer to our finished goods. So I'm going to start by classifying it on the debit side. This account also increases on the debit side and decreases on the credit side. So here I'm going to write my work in progress stock, which is the 2,552,745. So let me just write it using this. Now, remember, what is that one transaction that decreases your finished goods? This is if you're making sales, right? And remember, these sales or your finished goods that you are trying to, or rather, these finished goods that you are selling, you would need to recognize them on your credit side at their cost. Always, they should be in terms of their cost, right? So here I'm going to write my cost price as a result, or my cost of sales rather, cost of sales. Now, let me see if I have any information that relates to my finished goods being sold. So here in the information, I don't have any finished goods being sold. Now, remember, if I'm given my opening balance as well as my closing balance, this would be my balancing figure, my cost of sales, basically the cost of that stock that I've sold, right? Now, first, let me see if I'm given my closing balance for my finished goods. Okay, I am given my closing balance as 165,000, meaning that my cost of sales, it will be my balancing figure. So now let me classify or let me recognize my closing balance that I'm given. So closing balance, so my balance broke down for next year, and this amounts to 165,000. And remember, before it was brought down, it first had to be carried down here as 165,000. All right, now here, when I compare the two sides, I could see that my debit side is greater than my credit side. So as a result, I'm going to write the balance for my debit sides on both sides. So I'm going to add this 138,000 to this 2,552,745. And doing so, my total for my debit, it will be equals to 2,690,745. 45, right? Now, my cost of sales, which is my balancing figure, right? How would I go about recognizing it? So I would take the 2,690,745, and I'm going to subtract my balance carried down of 165,000. And now, if I do so, the value of the stock that I sold would amount to 2,525,745. So I'm going to write it there. It's 2,525,745. Right, and this would be my complete finished goods stock account, right? So now let us move on to the next section, which relates to our break-even point. Now 2.3, Little Angels Toy Manufacturers. Now Little Angels Toy Manufacturers, they manufacture scooters for toddlers. The information below was taken from their record for their financial year end 28 February 2022. Now provide calculations to show that the break-even point for the year end is 507 units. Now, what is the formula for your break-even? Okay, this formula is also there at the back of your question paper, but you need to know the formula. So basically, it's your total fixed cost. So your total fixed cost, which would be on your numerator, all divided by your, so let me just, selling price per unit minus your variable price per unit. What if I'm not given my selling price per unit, right? How would I go about calculating it? So I'm going to take my sales, right? This is if I'm given this information, right? So I'm going to take my total sales amount, right? And I'm going to divide it by the number of units available for sale. Available for sale. And as a result, I'm going to get my selling price per unit. Now, what about my variable cost per unit, right? So I'm going to take my total variable cost. So sometimes you would be given variable costs. You just need to know which cost is a fixed cost and which cost is a variable cost. Now remember, your variable costs are those costs which are directly dependent on the number of units you produce, right? For example, your direct material. The cost of your direct material, it would depend on how many units you produce. So you need to know your variable cost. So when you add those variable costs, you're going to get your total variable cost. Same applies with your fixed cost, but then we're going to get to that, right? So your total variable cost, and you're going to divide it by units available for sale, right? This is if you're not given these two amounts. This is how you can go about calculating them. Now, with regards to your fixed cost, as I've said before, you need to know what are your fixed costs. These are those costs which are not affected by your production, right? So basically, you would need to add all your fixed costs, such as, or for now, I can think of rent, right? So you were gonna add all those fixed costs, those costs which are not affected by your production, right? And you're gonna get your total, right? And that total, you're gonna use it as your total fixed cost, right? Now, this is just an example of the fixed cost that they could give you. Now, let us see if we are given this amount. Okay, so here we're given the amounts. I am given my fixed cost amount as 136,890. Right? So first you're going to write down your formula, then you're going to show these workings. Right? So remember, it's selling price per unit minus your variable price per unit. My selling price per unit, as you could see, it amounts to 860 minus my variable price per unit, which amounts to 590. Now punching this into your calculator, you should get 507 units. Now remember, what is your break-even point, right? So to be specific, what does this 507 units represent? So these are the number of goods you need to sell before you can start making a profit, right? So let me write that down. Number of units you need to sell before you can start making a profit, right? You can start making a profit. Meaning that if you sell 507 goods, right, your total income, it will be equal to your total expenses. So your profit at this point is zero. Total expenses, right? So now let us see what the next question is asking from us. Now explain using figures why the owner is not happy with the break-even point. Now here first I'm gonna write down how do you go about commenting on your break-even. So remember some questions which ask you to comment on the break-even, there are 4 marks. Basically, what are those points they expect you to give them whenever they ask you to comment on the break-even? So first I'm gonna share with you those points, and then we're gonna try and answer this question, right? So every time whenever you're commenting on your break-even, what is it that you need to do first? You need to compare it with last year's break-even. So you need to compare your break-even point with last year's break-even. Or basically this, you can make it your second point, right? Compare it with your last year break-even. Now, your first point, it would be comparing it to the number of units produced, right? So compare your break-even point with the number of units produced. The number of units produced and sold, basically. Produced and sold. So every time whenever they ask you to comment on your break-even, these are the points they expect you to give them, right? So first, you're gonna compare your break-even point with the number of units produced and sold. And remember, your number of units produced and sold, they need to be higher than your break-even, right? Because remember, your break-even represents those number of units you need to sell before you can start making a profit. Now, you're gonna compare your break-even after with last year's break-even point. Now, if your break-even point has increased from last year, for example, last year your break-even, it was 500, right? This year your break-even is 600. Now, is this a good thing or a bad thing? Right? I want you to take a pause and try to think about it. Now, this would be a bad thing. Why is that? Last year, before you can start making a profit, you only needed to sell 500 units. This year, you need to sell more before you can start making a profit, right? So basically, you need to sell 600, right? So as a result, if your break-even point has increased from last year, it will be a bad thing, right? Increase from last year, it's a bad thing. Now, if your break-even point has decreased from last year, it's a good thing, right? Now, what is the possible thing that could make your break-even point to increase? So basically, what can make your break-even point to increase? Now, to be specific, your variable cost. So if your break-even point has increased, this indicates that your variable cost, right? Not your variable price per unit, by the way, your variable cost, right? This indicates that your total variable costs are now higher, right? So as a result, your break-even point would increase, meaning that now you would need to sell more before you can start making a profit. Because remember, your fixed costs do not change, right? So they would still like remain constant. So the only cost that can change is your variable cost. Now, your break-even point, if it increases, this shows that your variable costs have increased, right? Variable costs such as your direct material or your material, your labor, right? Now, what could make your direct material to increase? Now, this is if maybe there is wastage, right? So there is wastage. So basically now your employees are wasting too much direct material in the production, or unskilled labor, which also leads to wastage, right? Skilled labor, right? This could also increase the labor hours if your labor is unskilled, right? Now, also, if you change, for to be specific, this one relates to your direct materials, right? So basically, if you change supplier, maybe now you want better quality, and remember, if you want better quality, you're gonna have to pay more, right? So the person, if they ask you what is that possible reason that made your break-even point to increase, it's going to be your variable cost, and you're going to look for that variable cost, like your direct material or your labor, and then you're going to comment the possible scenario which made your variable cost to increase, right? But for the purpose of this question, let us explain why the owner must not be happy with the break-even point, right? So the owner, before he can start making a profit, he needs to produce and sell 507 units, but he only produced and sold 480 units, right? So the reason why the owner shouldn't be happy is because this number of units produced and sold, they are less than his break-even point, right? So as a result, the difference between the two, 507 minus 480, which is 27 units. So he made a loss on 27 units, right? Hence, he shouldn't be happy with the break-even point, right? So first, you're gonna state that he is not happy. Reason being is that the number of units produced and sold, they are less than the break-even point, meaning that he made a loss on 27 units. Now the owner has changed. The owner has been importing plastic material from Botswana. She wants to change to a local supplier who is supplying the plastic material, which is of lower quality. Do you agree or disagree with her decision? Now, okay, this would have been a great thing if maybe the owner was sourcing locally, because costs such as import duties, delivery fees, they would be lower. But then if now she wants to supply a lower quality, right, she may lose her customers, right? So basically, my personal opinion, I do not agree with the decision, right? Reason being is that is going to affect the quality. So as a result, the quality won't be the same. And do you think she would still retain her customers if the quality is not the same, right? So this would lead, or this may lead to loss of customers. So basically, any valid point that you would give, right, as long as you justify it adequately, you're gonna be marked correct. So here, my points, or rather, I said I do not agree with the decision. Reason being is that the quality won't be the same, and this may lead to loss of customers, right? So now that'll be all for this question. Remember, if ever you have any question, always feel free to reach out. Thanks.